Hey, everybody. Happy Thursday. What a great day it is. What a great day it is to talk about real estate. And that's why I'm here today. I've been training my teams all morning. That's what I do on Thursdays is I work with our real estate team and I help them to win in real estate. But more importantly, I like to help my clients and my followers win in real estate. And there's probably one of the greatest little known facts when it comes to real estate and real estate investing that many people just don't know. And I'm screaming it from the mountaintops right now. So, the name of this show today is courage, right? It's about having, courage is the new financial currency. And you're like, Lisa, what do you mean by that? So I want to give you the definition of courage. So courage, according, there's many definitions of courage, but for this one, it's the ability to do something that frightens you, right? That's courage. In the absence of courage, do it scared. And if you guys have heard me speak, you know that I scream that one from the mountaintops. But it takes courage right now to get into this market, right? You read the news, it's bad news. You see the interest rates are up. You hear our country's going into a recession. You hear about job layoffs. It's like, stop. Last thing I ever want to do is buy real estate, right? That takes courage. It takes courage to build an empire. It takes courage. It takes courage to buy something in a good market. So of course it's going to take some courage to buy something in an unsettled market, right? And the market so many times is what you make of it. And I am here to tell you that the assets are on sale. Today, you can acquire properties for less money than what you could have a year and a half ago. So it's going to take a little bit of courage. It's going to take a little bit of mindset. It's going to take a little bit of creativity, right? And that's my job, is to help you think outside the box, is to push you, is to encourage you, is to be your coach. I am your real estate coach. That's why I come on. I don't come on just to say, hey, buy a house from me. I mean, that's great. And if you want to, I love that idea. Don't get me wrong. But that's not why I'm here today. I'm here to push you. I'm here to encourage you to have courage, because courage is the new financial literacy. It 100,000,000% is, right? And so I'm going to give you some ideas today, because so many people, and especially women, you guys know I'm so passionate about helping women build generational wealth through real estate. And why? Because there's a wealth gap between men and women. And the reason that there's a wealth gap, if you were to take a 50-year-old man and a 50-year-old woman, and they've had exactly the same financial experience, they got the same paying job, the same 401k, the same down payment, men tend to have a little more courage when it comes to putting things on the line, when it comes to making investments. And I want to give you a pretty safe way, ladies and gentlemen, to get into the game, to take what I would call assets that are dead. So how many of you have, show me in the comments, that you have 401ks, you've got Roth IRAs, you've got orphaned 401ks, you're self-employed, you've got a 401k, like you've got money kind of sitting in little pockets everywhere, and you don't even think about it because you can't cash it, you can't do anything with it, or you pay these monster penalties. So it just sits there, and you think, well, someday when I turn 62 or 65, then I'm going to use that money and I'm going to go to the Bahamas. Well, why not have that money help you build generational wealth? You're not going to build generational wealth in the stock market. Not going to happen. Okay. But you can build generational wealth through self-directed IRAs. And that's what we're going to talk about today. Now, full disclosure, I am not a tax or financial advisor. I am not here to give tax or financial advice. I feel like I have to put that disclaimer in there. I'm just telling you and sharing with my friends and my audience, I'm giving you the same advice that I give myself. I am moving every one of my Roth IRAs, all my self-employment, all my orphaned IRAs. I've moved everything into self-directed IRAs. I even have to go buy an IRA either today or tomorrow because I'm filing an extension and I have to have that sucker purchased. But then I'm immediately going to convert them into self-directed IRAs so I can take that money tax-free and I can put it into real estate. Now, I hope you're taking notes. Share this out. If you know people that have got, that they've had a few jobs, they've got some orphaned IRAs, they want to get into the game, but they're like, I don't have 20% down. I don't have 10% down. I'm tired of being a renter. I want to be a homeowner, but I don't have any cash sitting around right now. I'm scared. I'm scared because I read the newspaper every single day, and the newspaper tells me I should be I should be scared. I should be paralyzed, right? In the absence of courage, you do it scared. Okay. So if you're feeling that way right now, if you're feeling paralyzed financially, if you're feeling paralyzed with what's going on in the markets, if you're feeling, I'm asking you to open up for consideration some of the things that I'm going to share with you today. So first thing I want you to do is mark your calendars for April 19th. That's 2 days after your extension or your tax return has to be filed. I want you to mark April 19th on your calendar and for 12 Central, 1 p.m. Eastern. And I want you to go to crushingItinrealestate.com, crushingItinrealestate.com. And I want you to register for this webinar that we're having from, I've got a plan provider, somebody that handles with iPlan that handles the conversion of these vehicles, right? Of these, of the 401ks, of the Roth IRAs, of the regular IRAs, of the orphan 401ks. She is an absolute authority when it comes to how do you take all these crazy little accounts you've got sitting everywhere, put them into one account, a self-directed IRA that then you can leverage, you can invest in real estate. And that is the first step to building generational wealth. That is to get into real estate. And the best way to do it is when the assets are on sale. They're on sale right now. There's people running scared. And why are they on sale? It's not because the market's crashing. Hear me out. Hear me out. The market is not crashing. I'm in Central Texas, and I guess I should just speak to my market since this is where I'm an authority. The market's not crashing. It's adjusted some, yes, but where the investment is so interesting is that when interest rates were so cheap, right? Money was free. I used to say that all the time. Money's free. You got to go buy something. So a lot of these investors are on adjustable rate mortgages. And they got onto 3-year ARMs, 5-year ARMs, and now they're looking in the mirror and they're like, oh, dang, my interest rate's adjusting. So they go to the bank, and now that 3% interest rate turns into 6.5% to 7%. So the first thing that they say is they're gonna pull the trigger because the way that they built their pro forma was based on that 3% interest rate, and now their pro forma or their NOI, net operating income, has changed, right? Their cash flow has decreased. So many of these investors with these duplexes, triplexes, fourplexes, even single family homes are like, you know what? We're just going to dump them. We're going to take our losses. We're going to take our hits, and we're going to start all over again in this market, right? So as an investor or a potential investor, there's a lot of benefit in that, right? There's a lot of benefit in the fact that we're able to buy really great assets for less money. But what's kept people I know from getting in the game, they're like, I just don't want to give up my cash. I don't want to do this. I don't want to do that. Okay, cool. But how many of you have sitting around these orphan 401ks, these IRAs, any of that? We all do. We all do, especially if you're of a certain age. We've all had a couple of jobs. We've all had to buy the 6,500, or if you're over 50, to 7,500 Roth IRAs if you're self-employed, like all kinds of stuff like that. So that money's just sitting out there, and a lot of times people don't even realize they have it. So the first thing I want you to do is take inventory, that's what I'm looking for, of your financial, like what do you have sitting out there? What vehicles, investment vehicles do you have sitting out there that are tied to stocks that are dead or that are losing money, right? Okay, so there's that. So we're going to talk about that on April 19th at 12 noon, 1 Central, with iPlan, about how to convert those tools into assets. And why are they assets? Because now all of a sudden you have an asset, right? Or you have equity. So what we're converting them to actually is equity, because we're converting them to equity, money that you can go buy a homestead with, you can buy a house with, you can buy a duplex, a triplex, you can get into a real estate investment deal, a REIT. You can get involved in a syndication. What's a syndication? That's when several investors come together, they pool their money, and then they buy an asset. And so they share in the expense, they share in the equity, they share in the debt, and then they share in the profit at the end. It's a beautiful thing. So we're going to talk about that heavily on April 19th. But and you guys know me, I'm always available to talk. I'm absolutely made it my mission to become an authority on this because, the market that I serve, I work with a lot of investors. I work with first-time investors. I work with many time investors. You guys see what I'm not doing, but a lot of times I work with first-time home buyers. And a lot of our millennials. They've been in the tech sector. And what happens in the tech sector? You end up getting 2 or 3 different jobs. You switch jobs because you get a better job or you get recruited away or whatever that looks like. And what you leave behind a lot of times is an old 401k account. And you think you're 30 years old. You think, oh, heck, I'm just going to let it sit there and I'm just going to let it bake and do whatever it's going to do. And someday I'm going to draw on it. But guess what? I'm still renting a house because I don't have any cash. I don't have any money to be able to put down. Part of it is because you were putting so much into that 401k, which again, that's going to be for another video. But this is the greatest tool that we have in our arsenal right now, right? Courage is the new financial currency, excuse me. And I want you to have courage to make some moves in this market because we have got a really unique opportunity right now to be able to invest, to be able to pick up assets, to be able to start building generational wealth through real estate. So what does that look like? Okay, number one, you've got to set up the self-directed IRA, right? So you've really got to take inventory of everything that you've got, all of your 401ks and all of your IRAs and all of your Roth IRAs and any other little accounts that you've got. And we've got to see what is actually, what you're actually able to pull over into the self-directed IRA. And think about a self-directed, okay, it explains itself. You are self-directing that investment. I would much rather put that investment into real estate that does many things. Like, what are some of the advantages of real estate? Cash flow. Another advantage is that the appreciation outruns inflation typically. I don't know what inflation's sitting at today, but I did a video a couple of weeks ago and it was at 7 or 8% from a national standpoint, depending on where you purchase real estate. Your appreciation on that real estate is anywhere from 8 to 15%. So as long as the real estate appreciates more than what the inflation rate is, you're winning. Okay, you are winning. If your money sits in the bank, cash is trash. Because right now, the majority of us are only earning about 4% on our money sitting in a savings account. So we're earning 4, okay? Inflation is at 8, meaning cost of goods, cost of everything on average is 8% higher than what it was in 2020, okay? So there's a 4% delta, right, between what we're earning and what we're spending. So guess what? We're losing. We're losing, all right? Have courage. And the courage is take that cash, convert those financial vehicles, put it into real estate. Then that real estate cash flows and it appreciates at a higher rate than inflation. That's the way you win. That's the way you build generational wealth. All right. So step number 1 is you set up the self-directed IRA. Step number 2, you got to fund the account, right? We can't just set it up and not have any funds in it. So we're going to talk about that on April 19th. How do you fund that self-directed IRA? We're going to give you so many hacks, so many ways to be able to do it. Can you guys tell I'm excited about this? I found so much money to be able to go invest once I learned this strategy. And I never had to hit our savings accounts or any of our other accounts to be able to do the real estate investing that I've been doing in the last several years, but in this case, with this money in the last several months, right? Okay, so number 2, we got to fund the account. We're going to talk about that on April 19th. We're going to talk about how you're going to fund that account. God, I'm sorry, all my allergies are just killing me. Number 3, we're going to identify the kind of real estate you want to make. That doesn't even make sense. But we want to identify the kind of real estate that you want to purchase, right? Is it going to be a single family home because you're going to live in it? Is it going to be a duplex? Is it going to be a triplex, a fourplex, a small apartment complex, a commercial building? What is it going to be? All right. So we have to identify the asset that we're going to purchase. All right. Number 4, you got to hire the best agent. All right. So if you're sitting in my market, I hope that that I will be your consideration for that. I'm definitely applying for the job. I try to bring massive value to my followers, to my clients and my friends. And then number 5, you purchase the property. And then number 6, I mean, what I'm trying to show you is boom, 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 how stinking easy this stuff is, y'all. Like there is no crazy science to this. You reinvest the profits. So what happens is, okay, I'm going to give you an example. Let's say that you use the self-directed IRA to put a down payment on a duplex. Okay, I'm going to do super easy numbers here, and the payment on the duplex is $1,000. So you use part of your self-directed IRA, you put the down payment down, you you have a $1,000 payment on it, but you're earning $800 a month in rental income, right? $900 each side, all right, of the duplex. That $1,800 goes back tax free into your IRA account. So, you're not putting that in your pocket every single month, but you're building the wealth in your IRA account, right? You're building the wealth. Then and then from that account, then you would also pay the mortgage payment on that. If you've got debt, you may not have debt. You may have enough in there to pay cash. It's up to you. So you make the payment, you make all of the repairs, you make property management fees, anything can come out of that account. So every single month you're watching this self-directed IRA, this account just grow and grow and grow tax-free, right? Because if you buy an investment property and you do it the other way, you have to pay gains on that monthly rental. Again, I digress. I'm not going to go into that in this video. But so what's powerful about this is that you're able to not only build the equity in your self-directed IRA because the asset appreciates 8 to 15% a year, asset meaning the property, but you're also putting massive monthly cash flow back into that account that it's never earning in the stock market. It's not earning it. Okay. So it's the greatest investment tool and strategy on the planet. Now, you're going to get all excited. You're going to watch this video and you're going to call your financial planner and you're going to go, here's what I want to do. Or your stockbroker. I want to go everything into self-directed IRAs. I just watched this video by Lisa Copeland and I'm convinced I'm calling her right now and I'm going to buy real estate and blah, blah, blah. They're going to go, no, 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 don't do that. Why? Because they don't want you going into a self-directed IRA. Why? They're going to lose control. They lose control. Now all of a sudden they're not getting paid a commission on you buying stocks and you rolling around with that IRA, right? Or with your portfolio. So you have to be really, really strategic and you have to have courage, right? When you have these conversations with your financial people, I want you to be an absolute authority when it comes to your financial portfolio. That's why I'm not hosting this webinar on the 19th. I'm hosting it, but I'm not putting it on. I've brought in the experts to bring it on with iPlan. And why? Because I want you to hear from the horse's mouth. I want you to hear, I want you to have courage to take control of your finances and not listen to some stockbroker. And I have a stockbroker. I'm not putting him down. I'm not saying every dime that you've got should be in real estate. I'm kind of saying that. It really is the safest bet, but in all seriousness, to have some diversity, but I'm saying you should look at taking a big chunk of what's just sitting out there right now and floating around and bringing it into one vehicle, a self-directed IRA that you can then invest in an asset that will help your family build generational wealth in real estate. It'll help your son or your daughter who's 30 years old buy their first house without having to take money out of their 401k and pay penalties or pay it back because they probably have an orphaned 401k from the last tech company that they were at. I can go on and on and on about the strategies, but there are so many wealth building strategies out there that only the top 1% know. They just do. I mean, that is how but I do have a couple of billionaire friends. And that's how they have built their billions, is they've built it in real estate and using wealth building strategies that not only help you build your portfolio, but they also reduce your tax liability. And again, I'm not going to get into all the tax stuff now, but the taxes are ridiculous. How you can reduce your tax impact by using depreciation, right? By rolling all the monthly cash flow into yourself, back into your self-directed IRA. That becomes a non-taxable event. And then when it's time to flip that property, move to the next property, put that money into a 1031 exchange. I mean, you can continue to beat the tax man, okay, legally, if you're set up the right way in the beginning. And that's what I want to help you do. That's why I consider myself one of the leading authorities in real estate today, is because not only do I show you how to do it, but I do it myself. So I hope you found this informational. Let me know in the chat if you're catching this on the replay. In fact, if you're catching this on the replay, let me put up here the banner. Here we go. If you're catching this on the replay or you're coming in the middle of this thing, we're having an incredible webinar on April 19th at 12 noon Central Time, 1 p.m. Eastern. Even if you can't make it, register for it because we're going to send it back out to you. And I'm doing it with iPlan, and they're going to lay out all of the strategies so you can put your orphaned 401ks, your Roth IRAs, and all of these like abandoned funds that all of us have, and put it into a self-directed IRA and take that money to purchase assets that are on sale now, right? Put it into the real estate market and build your wealth, generational wealth through real estate. That is why I do what I do every single day. Go ahead and register. Crushing it with realestate.com. That gets you in and gets you registered for the webinar on the 19th. If I can be of service to you, if I can answer any questions for you, you guys know how to find me. If you're watching this, you can find me. But easiest way is lisa@lisacopeland.com. Lisa@lisacopeland.com. I'll jump on a 15-minute strategy call with you, 20 minutes, whatever you need. That's what I'm here to do. I'm here to serve. But I promise you, I can show you how to build generational wealth in real estate. So I hope you all have a fantastic Thursday. And you'll see me around a lot between now and the 19th, because I'm going to continue to promote this webinar, because I know that we can show people how to change their lives and how to change their financial futures. I hope you have a great day. Bye-bye.